Hi, this is Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Today is January 6th. It is the first update of the month and of the year. So I want to do a Connecticut real estate kickoff for the year. Before I do that, I wanted to talk real quickly about the channel philosophy. So the first thing is we focus on the Connecticut real estate market. There's YouTube channels out there talking about all sorts of stuff. We're specifically in the Connecticut real estate market. I'm a licensed broker here in Connecticut. This is what we talk about. I do bring in information from the national scene, but generally it's Connecticut. We're talking about facts, not drama. You're not going to see me dancing and singing. You're not going to see me pulling my hair out about the most recent newspaper article and everything that's going on with that. Most of those articles and headlines are misleading anyway. I'm just giving you the real data so that you can make the best decisions about your real estate journey. And my goal is education. That's the last one, education, not lead generation. A lot of these YouTubers out there, if you go down into their comment section or their below, they're going to have all sorts of information about how you can sign up for the latest training class or subscription or whatever. I don't do that. I do my business as a real estate broker in the state of Connecticut. If you're looking to buy or sell, would love to help you out, would love to talk to you. If you've already got somebody you're working with, or if you want to work with somebody else, more power to you. Hopefully the information in this channel is beneficial to you. So bottom line, we want to be your guide through the real estate maze. We want to be that trusted advisor right next to you, whether it's just watching the channel or working with me as a real estate broker. So let's talk about the Connecticut real estate market. 4,113 active houses on the market today, down about another 150 from last week. We got 57 coming soon. 56% of those houses that are on the market, or 2,323, have been on for greater than 60 days. Now, the number of days on market for the average house is definitely coming up a little bit, but it's nowhere near 60 right now. So those houses, they need some TLC, maybe they're overpriced or some kind of an issue. If you're willing to go in and do some hardcore negotiating, you might get a good deal and you might be able to get that HGTV experience. Talk to me about it. I'll be glad to help you out. We closed 3,300 houses in December, which is down just a little bit from November. The revised number for November is about a little over 3,400. So we're right in that same ballpark. And when we look at the inventory, it's about 1.3 months on hand. So very, very low inventory continues. So new listings. This is why we have low inventory. Downward trend. Over the holidays, there wasn't much going on. You can see that in the chart. Then there was that big peak up at the end. That's all the people that wanted to list, but were waiting until the holidays were over. So there's nothing crazy there. What we're looking for is that trend to reverse and start going up. And when we see that, then we'll know we're getting into the spring season and things will be getting a little bit better and hopefully a little bit more inventory on the market. Back on the market, that's a house that went under contract and then the contract fell through for some reason. Not too much activity around the holidays and a little bit of a peak, but still in a downward trend and still very low numbers. Who knows, maybe somebody went out and spent a little bit too much on the holidays, whatever, but for some reason those deals fell apart. Price reductions. So price reductions, not much going on during the holidays again, and then a little bit of a peak, not as much as the beginning of the month, but certainly a little peak up right here the last few days. That's very normal. Again, low numbers, and what we're seeing is people had priced houses too high and they've had to come and bring them down. Price reductions typically are related to early pricing too high, and pricing too high is not a good thing for listings. Going into the primary mortgage market survey, but 6.48 is the average for the last week, up just a little bit, but we're kind of in that mid sixes range for the last couple of months. And I expect this to kind of stay there and hopefully start trending down over the next couple months. We'll see what the Fed does here. We had a strong jobs report, or at least on the surface it was strong, but when you really dig into it and look at the next layer, the small and medium-sized companies are doing some hiring, but the large companies were laying a lot of people off. It was over 100,000. And that comes down to higher paying jobs with more benefits are going away, and then those people are filtering into some of these lower paying jobs in smaller businesses, which is good because the smaller businesses were short people. But I think that is showing that the job market's starting to get a little bit weaker. So we'll see how that plays out as we go. It's been a while since I pulled out this chart, but I wanted to show it again. This is the last 50 years of interest rates compared to the rates today. You can see over the last few years, rates have been a lot lower. But if you go back 30, 40, 50 years, not so much. So if you're ready today, then just keep in mind when interest rates do come back down, which they will, you can always refinance if you buy now. Hopefully this is value to you guys. We look forward to keeping you up to date every week as we go forward. Have a great weekend, and we'll talk soon.